So today I'm going to talk about the few stocks that I've been buying and selling recently. I'll go through these stocks and spend a minute or two on them, and I'm just going to keep up that transparency so you guys know what I'm buying, what I'm selling in this stock market, and especially this bear market that we're in right now, even though we've had a couple of good weeks. So I'll go through these stocks right now, and as always, if you want to know what I'm buying and selling in real time, make sure you join the Patreon. The link is in the description. You join through there, you get my live buy and sell alerts, as well as 2 exclusive videos a week. But we'll go on to these stocks that I've been buying and selling recently. So I did used to do this as a weekly series, but I have now moved it to a monthly series just because I thought it was getting a bit stale doing it weekly, because I saw the views drop off, and I think it's because I'm a long-term investor. I'm always going to be buying and averaging in the same companies basically. So I thought moving it to a monthly series would work a lot better, and it seems like the feedback has been positive to do that as well. So yeah, we'll go through these stocks that I've been buying in the last few weeks. So starting off with number one, which is PayPal. So it's actually up 13%, nearly 14% in pre-market right now as recording this video. It did actually bring out earnings last night. I've not actually listened to the conference call. It's on my to-do list today, but I did have a scan through the financials. The financials were very good that they brought out. I think there was a big share back announced as well. The EPS was really strong as well, and the revenue growth was pretty decent. And this is after PayPal had previously been downgrading the last few quarters on the guidance, and they've always said, look, when we get to the back end of the year, we'll actually start moving, there we go, 14% up, and we'll actually start moving back in the positive direction. And their Q2 earnings reports kind of signaled, okay, they were okay, and hopefully that Q3 and Q4 get stronger as well. So yeah, pretty positive for PayPal, and no surprise to see a big 14% jump here, because look at the sell-off. You're selling one of the really big, gems in the stock market, a revenue beast, a profit beast, good balance sheet, and it's just been taken down, 75%, and just put down some lowest valuations it's ever been at, which is just crazy. So I've been buying PayPal in the last kind of few weeks, and I have got the rewards with it being up in the last 5 days over 8%, and when the market opens, I'll be up even more in when it opens up. So yeah, well done to you guys that own PayPal. Next up is Meta. So Meta's been a little bit flatter. It was doing okay, and then it had earnings, and then it's just kind of been stuck in this range where a lot of stocks have started to recover. Meta's kind of stayed down here. I've got to look at Meta though, and I think 13 times earnings is just absolutely bonkers for Meta. Like, I was looking at Apple the other day, and I talked about it on the earnings review on the Patreon, and I was like, Meta, Apple, they're very much in the same situation right here. And you got Meta trading down at 13 times earnings, and then Apple that trades at 27 times earnings. It's just absolutely insane. Like, this is going to be, you got to realize the situation that Meta's going through right now with, obviously, it's got its tough comps. It's got what is happening in the world right now. It's got all the Apple changes to go through. It's moving away to Reels at the moment, which is less monetized. You got to realize these issues are not always going to continue for Meta going forward, and at some point, the Instagram is always going to be around, and it's going to be a recovery at some point for Meta, and I think at 13 times earnings, it is not bad at all to be taking a punt on this one. So yeah, picked up some more shares in Meta. Google, I've been buying a little bit more Google when I can. It is starting to slowly come out of the range where I want to be buying it. So most of you guys know I kind of want to get it around this 106, 7, 8, 9 mark. When it starts popping above 110, I get a little bit drawn away from it there. Not that I think it's a crazy valuation at 22 times earnings. I just think it's better when it's in that kind of teen range P ratio. But you never know, I might pick up some shares. I've built quite a decent position. I'd just have loved to build it a bit bigger, but it means the stock price has been down here at, down in the dumps for a longer time period, which still might happen. So we'll see if that happens. They brought out earnings well, Google. I thought Google earnings were okay. I didn't think they were amazing. I didn't think they were terrible. The market liked them though. It gave it a really good bounce off their earnings. And I think when you look at Google in the long term, search engine, YouTube, I think it's a very safe company. So yeah, I have been picking up a few more shares in Google when I can. Shopify. So I have been buying some more shares in Shopify. No idea why it's put me on the London listing. Google's been doing this to me recently quite a bit. Shopify has been sold off a huge amount. You can see here it looks very similar to PayPal. Boom, down nearly 80%. And Shopify historically never really has that many dips. So to be down 80% is a fair bit of a drop for Shopify. Shopify brought out earnings. Same again, I thought they were just okay. I didn't think they were terrible. I didn't think they were amazing. I think in the long term though, when you look at Shopify, one of the big bets that they're making at the moment is the logistics side of it. And that will be a massive driver and moat for them in the next few years, and going forward in the next 5 years. I only see more and more people using Shopify to be building an e-commerce site. It's the platform that really gives you access to everything and will really help you build an e-commerce company. So I can only see Shopify doing absolutely amazing in the next 5 years. It is the go-to e-commerce site that you want to build on. So yeah, I've been picking up a few shares in Shopify when I can. Next up is DraftKings. So obviously DraftKings do report earnings this week, so we'll probably be talking about DraftKings a little bit later in the week as well, and what's gone on there with their earnings. It had a fantastic day yesterday, up 9%, and I think actually in pre-market it's pretty strong. But yeah, DraftKings, I've been buying shares when I can. I've kind of got to the point now with DraftKings I've got to be really careful, because I'm at the point now where I'm like, I've capitalized when this stock was in like, let's go a little bit zoomed in here, $10, $10 there, $10. I've been trying to capitalize on DraftKings at that $10, $11 mark. If this does start popping up now towards like the higher teen range, I might slow my buying down massively. So yeah, I'm a little bit at a point now where I might start slowing down the buying and building up a cash pile. I've capitalized on the opportunity, and I'm happy to kind of see the run kind of coming with DraftKings. But yeah, up 43% since the 16th of June. But yeah, I'm just going to not talk about this one too much today, because I feel like I'll be talking about it a bit on Friday when they do report earnings. I've got to say the earnings, I'm going in not knowing what's going to happen here. I think EPS, it could be in a huge range. Revenue could be in a huge range. A lot of different factors coming in. I think analysts have gone very strong on the numbers. So if they've gone strong on the numbers, then obviously DraftKings could disappoint and we see a drop. And then obviously I get my opportunity to buy back in maybe the $12, $13 range. We'll see what happens. I don't want to talk about too much about it when it's reporting earnings. Callaway Golf, same again, these are actually reporting earnings tomorrow, so I don't want to say too much about these guys when they're reporting earnings, but yeah, I've been capitalising the opportunity in Callaway Golf. It had way bit of a bigger pullback than what I thought it would ever do, because this company's been on absolute fire. The profit side of it, the revenue side of it, it's absolutely smashing analyst expectations. There's never been a point where Callaway's business has been so strong, from the apparel, the actual golf clubs, and now Topgolf. It's in the strongest position that it's ever been at. So yeah, this is a company that I really do like to be building in my portfolio. And the last one is a company that I have sold out. So I sold my position in my eToro SPAC. So basically eToro, which is a brokerage service, was going to come through a SPAC. I bought the SPAC and it was a very, very high risk play. It was what I call one of my free high risk plays, one of them being Card Factory, because it had the possibility of going bankrupt, even though it doesn't have the possibility of going bankrupt now. I don't really call it as much of a high risk play, so that's kind of not there anymore. I would say that eHang is another high risk play that I have, because basically they're a non-revenue company basically. I would say that Planet 13 is another one that I have, because it's in a very regulated market, I would say, at the moment, is one way to put it. So there's a lot of factors that could change how that plays out, really. And then there's also the eToro merger, the SPAC that was going to come through, which was fintech acquisition. We've known that there's been a few issues for a while, but it's actually been confirmed that they're not going to be completing the SPAC with fintech and eToro. So yeah, a bit annoyed by eToro that they dragged it on for this so long and then done this. I've actually had a few other issues with eToro recently, but that's not to do with like the financial. That's more with partnerships and stuff like that. I'm not a big fan of eToro at all at the moment. So yeah, bit of a high risk, and it hasn't worked out. So I did sell it out, because I thought there's no point in me just holding the SPAC now. It's just basically gambling and hoping it works out for the positive. So I might as well use that money and buy some other stocks, which I did do. So yeah, I did sell it out at a loss. I did take a 14% loss on it, which isn't really that much, to be honest with you. So yeah, and in fact I've actually sold two other stocks since this time frame, which have made really nice profits and already easily cover what the loss was on this one. So yeah, I think also the money that I sold for here will be easily made up in the companies that I invest in as well. So yeah, a very small position in my portfolio, very high risk, didn't work out. At the end of the day, it's not a massive loss. But you've always got to be careful when you do take a bit more high risk that you might not get the high rewards, and that's what's happened here. So yeah, unfortunately, it is the second loss that I've taken in my investing time. It's the first loss that I've taken on an investment in 2 years, which isn't too bad really when you look at it from that point of view. So yeah, it sucks a little bit, but yeah, it wasn't the biggest issue ever when you look at the loss and the position size that it did make up. So yeah, I sold that one out, and yeah, don't really regret it. I think that's probably the right decision. Use that money in a better place. So yeah, those are the stocks that I've been buying, and also the one stock that I did sell at a little bit of a loss anyway. So hope you enjoyed the transparency with me sharing you all the moves that I'm making in the stock market. Yeah, obviously I think that there's not many channels that do kind of keep you up to date with what they're buying, what they're selling, or potentially buying things in the background or selling things out as talk about things. Oh, I'm buying this stock, and then eventually it doesn't work out, and then selling it secretly in the background. None of that happens here, and yeah, hope the transparency is useful. So I hope you enjoyed the video anyway, guys, and I'll catch you in a bit.